cannabis and cryptocurrency. I'm sure that you've heard about one or both in the news ad nauseum in the last year or so. So I want to shed some light on some of the tax consequences that you'll encounter from the business side of it, and what you might see from getting involved. So just for our agenda for the day, we'll talk about cannabis's current status and the impact of legalization in the next little while, income and sales tax consequences, the upcoming somewhat controversial cannabis duty, and some industry challenges going on. For cryptocurrencies, I thought it would be best to kind of cover what is a cryptocurrency exactly, as I know that there's some confusion about that. And we'll start with CRA's position as a guideline for it, and talk about barter transactions, sales tax implications, mining cryptocurrency, its donations, and even some foreign reporting implications. So its current status is basically a gray market. It's in, decriminalized, illegal, depending on what exactly the issue is. And of course, we're all looking towards that October 17th, 2018 date when everything will become legal. Now, in this gray market, you don't really see a whole lot of enforcement, and that's kind of what has led to its prominence right now, where you don't see too much enforcement, but we have seen it on some of the brick and mortar shops in Vancouver. I'm sure if you wander around Vancouver, you'll see a number of dispensaries that may or may not be operating on a fully licensed basis. The BC Supreme Court right now is handling a case about 53 unlicensed dispensaries for bylaw violations, which have amounted to about $2.5 million in fines, about 3,600 tickets. But if you think about that from the overall size of the business, it's not that big. It's really almost a cost of doing business for these dispensaries, and maybe that correlates to why not all of them have been paid at this point. So legalization, as I mentioned, October 17th is the big date. It's that certain products will become available to non-medicinal users. Other products will remain not fully legal until October 17th of 2019, which is 1 year later, which would be edibles and certain concentrates. But the question that I want to pose is, will operating in that unlicensed space after October 17th become a larger risk than operating in that space prior to October 17th? Certainly when you have a clearer definition of what is a fully legal operation versus a gray market operation, will there be more of an incentive for law enforcement to get involved and to shut those operations down, as opposed to just letting them run or turning the shoulder as it is now? So income tax consequences, it really is business as usual. Cannabis is fundamentally a product. That product is sold. If it's sold in Canada and you're carrying on a business in Canada, it's going to be taxable in Canada. And where it's going to be taxable will depend on where you have your permanent establishments, your warehouses, your office, your farms, whatever. The more interesting side of it, I would say, is where the audit risks will come from, especially for what's gone on to date. One of the big ones that we've seen is documentation issues, particularly surrounding inventory. We've seen a lot of businesses that are very willing and forthcoming to go and pay their income taxes, collect their GST, pay their payroll taxes, and really be fully on board. But the problem that a lot of them face is, where are they getting their inventory from? And often those kind of situations can be, they'll be lacking invoices, they'll be lacking receipts, they'll be lacking a formal paper trail, as there'll be a lot of cash transactions. And those pose significant audit risks where you could end up where CRA challenges your entire cost of goods sold balance and you don't have the backup for it. So it's definitely a significant issue in the industry. Payroll, if you have staff that's being paid under the table as a number might right now, that's a very significant issue. And even beyond that, if you are recording all of your payroll expenses, have you adequately considered whether that individual is an employee or an independent contractor, and taken the appropriate payroll or GST consequences accordingly? And lastly, the GST and HST collection, whether it's being charged at appropriate rates for the provinces that it's being sold to, and whether all of this is ultimately being reported. And the last two in particular, as I'm sure many of our public company clients are aware, those director-based risks, they persist even after the corporation is gone. So it's important that people are cognizant of these facts and pay attention to it, because you could end up with a significant personal liability at the end. As far as sales taxes are concerned for GST and HST, CRA's interpretation of the matter is it possible for any type of consumer to purchase the drug without a prescription or an exemption? And the issue here is that for medical marijuana users, what they have is an authority to possess, which is not specifically a prescription. And so somebody without a prescription is able to purchase it, therefore it's subject to GST or HST. From the PST side, there hasn't really been a lot of guidance from the provincial government as far as what they really plan on doing, other than it's a product, we intend on collecting PST on it. I would anticipate that you'll see a lot more enforcement measures happening after the October 17th date from the provincial side. In terms of future changes, the GST and HST, as I mentioned, there's the reason that it's taxable for GST and HST purposes, where a lot of prescription medicines are not, is that you have the availability to get it without one, right? So what if a particular entrepreneurial cannabis grower wants to develop a strain that's specifically focused on one particular aspect of somebody's health, and they make sure that that is only available on a prescription basis? Maybe it'll be possible to then have that be on a zero-rated basis, where that lower cost is then passed off to the end consumer. For the PST, I don't see there being a whole lot of changes unless you get a nice election platform from somebody that's looking to come into power or stay into power for changes. But what I would expect is more specific legislation and guidance from both federal and provincial bodies as the market matures and grows further. We can definitely see if there will be changes, that they'll be more on a social welfare basis than they would be otherwise. The cannabis duty, as I mentioned, it's more details were provided on it, I believe, last year, and it's either going to be a flat rate duty or it's going to be based on the purchase price. So the flat rate would be $1 per gram or 10% of the purchase price, whichever is greater. And the impact here is particularly significant to low cost or low price suppliers. It's if you have somebody that's selling cannabis at $5 per gram, that's a 20% markup on their product that their clients might not be willing to go and pay. As a duty, GST and HST will generally apply on top of that duty amount, so you're kind of getting hit twice on that 10% amount. The CRA said that they want about 6 years worth of documentation with respect to what companies pay or collect from this duty. But the one note that I wanted to highlight as far as this is concerned, if you've heard of it, is that this is set as a federal and provincial maximum. It's not necessarily that will be the rate that is charged, but I mean, it's likely with everybody wanting a cash grab. But it's not necessarily the rate that will end up being in effect everywhere. But it has been agreed that that is the cap for now. So industry challenges, as I mentioned, documentation is a very significant one. Banking, we've seen to be an issue where banks might be less willing to get involved with people who are involved in the cannabis industry, particularly in the gray market side of things. Licensing will certainly be an issue over the next few months, where everybody who's involved in these gray market operations will want to go and get these licenses and magically legitimize their operation overnight. This last point here, I'm very curious to see how it'll end up playing out. The problem with all of these taxes and duties and everything that's being compounded all at once is the pricing of legal cannabis versus the black market. It'll be interesting to see where consumers will end up choosing to have, perhaps this higher risk black market where they'll be getting their product at $5 a gram, or maybe the legal at $15 per gram, and whether people will be willing to pay out that higher amount. So cryptocurrencies. I spent a lot of time trying to go and find a funny intermission between my two topics here to kind of break it up. And I was really disappointed that there wasn't a whole lot available. I figured with Bitcoin's popularity that there would have been a bit more, but as it turns out, I'm a new dad, and I've been practicing my whole life for dad jokes. So this is mine as an ode to the moment-to-moment change in price that we've seen in Bitcoin over the last little while. So as I mentioned, I kind of wanted to explain what a cryptocurrency is. And I thought that the best way to start with that would be to understand what blockchain technology is. So blockchain technology is an ongoing, permanent, unalterable ledger. The strength of it comes from the fact that it's hosted on this massive peer-to-peer network. And it becomes unalterable in the sense that if you have millions of people all looking at the same data, it's a lot harder to go and change something in that data than something that's in isolation. New transactions are added to a new block as it's being formed. That block becomes validated. For cryptocurrencies, it's in the process that you might know as mining. And that validation kind of seals the block, adds it to the next chain, and they keep on moving forward. The transactions that are in process, those are still vulnerable in the same way that data that's held on conventional storage mediums is, but it's not particularly more vulnerable. So that's where a lot of the strength and value with this blockchain technology comes from, is in the relative security. So cryptocurrency specifically is an asset that is recorded on a particular blockchain. There is no intrinsic value to a Bitcoin. It's not redeemable for a product the same way where if you were to go on the open market and buy a unit of gold or a unit of oil, that you could, in theory, go somewhere and redeem it for that oil or that gold. There is no physical form to it. It's an intangible asset. And the supply of that cryptocurrency, its creation, is ultimately decentralized. There is no central bank that is doling out cash or bitcoins or whatever other cryptocurrency in this case. One of the other interesting things about them is that there's fairly low barriers to entry. It's very easy to go and start a new cryptocurrency. And as of today, there's about 2,000 that are in active circulation. In my research, I found that there were about 4,000 that have been created, and I would imagine that the difference is, various ones that have failed over that period of time. And the reason being the difficulty for buy-in. In order to have these cryptocurrencies be successful, you need a lot of people that are willing to keep mining it and that see value in having that particular intangible asset. So if you don't get the people in, then there won't be success. So CRA's position, despite the fact that currency is in cryptocurrency, it is not considered a currency for Canadian tax purposes, which is a common misconception. Instead, CRA's commentary kind of goes back to 2013 when Bitcoin was starting to become a little bit more popular, and they were asked to comment on it, that instead it's treated as a commodity, like a camera or like a chair. It's just some other product. The significance of this is that then all exchanges that happen between Bitcoin and any other non-currency asset is a barter transaction. So what is a barter transaction? Why is that significant? It's basically what is the price that a taxpayer would charge an arm's length person for that particular commodity. And that price needs to be converted, into Canadian dollars or whatever other functional currency that you have going on. But one of the interesting things is that this might cause a disparity in terms of negotiation power. If you, for example, are an astute negotiator and you're able to get something at a very discounted price, and perhaps you could argue that that is fair value as you've transacted with a third party. What if another third party who doesn't have that same negotiation power is not able to go and get that? Does that become the fair value? I won't get into this too much. I'm sure Mark and Fred will be talking about it a lot. But you can have a difference in terms of the actual cash that you collect versus what the tax implications of that thing is that you have sold or bought, which I imagine a lot of people would consider unfair. So GST and HST implications. This is really interesting to me. If let's say that you're going to London Drugs, and I'll use my camera example again, and you want to buy a camera and you pay, the camera costs $200, you pay $10 GST, you're going to pay $210. Now, if you are paying in Bitcoin, which is also a commodity, technically you should be collecting GST, HST from London Drugs for purchasing that camera. There hasn't been a CRA position on this matter, and it's certainly not enforced. But if you were to follow the letter of how these transactions would take place, that is the logical conclusion. So you could end up with GST and HST on both sides of a transaction. Mining. So mining cryptocurrencies. Mining is basically the granting of a unit or some partial unit of a cryptocurrency when you have successfully validated that block. If you recall, I said that somebody needs to go in and find the code or the password to kind of get it into the next block, and that person is rewarded by getting a unit of that cryptocurrency for their successful decoding. Now, the mining of this could be treated as either a business or non-taxable, depending on the scale of operations and a number of other factors. A question is, how many computers mining Bitcoin is too many computers for it to be a hobby, And I suspect that we'll get some guidance from CRA and the courts as this becomes more prevalent for households that are involved in this matter. And the other thing with this is that income is determined based on the value of that taxpayer's inventory of the mined product at the end of the year. So let's say you have your calendar year end, you're mining Bitcoin in March, and it's $10,000 per coin. But at the end of the year, it's $14,000 per coin. You're going to be paying tax based on $14,000 per coin because that's the value at the end of the year. Now, if you sell that coin 2 months later for $8,000 per coin, you have a timing problem there. You'll be paying tax on that $14,000 value, but you won't be able to recognize the loss from that $14,000 to $8,000 drop until the next fiscal year. So that can definitely cause some timing issues for the tax side. Donations will be based on the fair market value at the time of the transfer, as normal, but one nuance here is if you've used Bitcoin, again, as an example, to obtain some other property that you gift in kind to a charity, for example, you buy a bus from using Bitcoin, it's not the amount of Bitcoin or the value of Bitcoin at the time that you purchase that bus. It's whatever the value that is determined that bus to be worth. And maybe those are the same, but maybe they're not. So you could have discrepancies even with very quick turnaround between the time that you obtain that item that you wish to donate and the time that it's actually donated. Again, causing some sort of inequity issue. Specified foreign property. I suspect that this is where a lot of people have had issues in the last little while, or maybe they don't even know that they have issues. CRA views cryptocurrencies to be funds or intangible property, which falls under T1135 reporting obligations. The big issue with this is how do you determine the cost of this property? The T1135, it's only applicable if you have over $100,000 Canadian dollars equivalent in cost of whatever that foreign property is. And certainly if you're purchasing coins on the open market, it's very easy to go and find it. But what about mining? How much of your costs from your computer, from your electricity, how much of that should be capitalized into the cost of obtaining that Bitcoin? And even if you know what it is, have you been doing it for the last few years? Because this obligation hasn't changed. The one nice exemption from this is if you have something that is involved in an active business, then you don't need to report that activity on the T1135. But you can't have your cake and eat it too in this case. If you want your mining activities to be considered a hobby and non-taxable, then it will fall under that T1135. So some common problems will be income versus capital gains. You know, if you're holding you purchase those cryptocurrency assets for the purpose of speculation, chances are that you're going to be falling under the income category rather than capital gains. Is it a business or is it a hobby? As I mentioned, how many computers is too many computers to be mining? And the non-reporting rules under the specified foreign properties. I imagine there's a lot of people who have filed existing T1135s and have not disclosed the fact that they have Bitcoins in their possession, regardless of what the amount of that cost is. And there's definitely valuation issues, but I'll leave that to our wonderful valuations department to talk more about. Anyway, that's all for me. Thank you.